Today, we're diving into the Philadelphia apartment market because, well, something big is happening under the surface. A fundamental shift is underway, and it's changing the game for pretty much everyone, renters, owners, and investors alike. So let's break down what's really going on. If you just glance at the market, it might look pretty calm, almost stable, but if you peel back a layer, you'll see that the balance of power between landlords and tenants, well, it's going through its most significant change in years. All right, so here's how we're going to tackle this. First, we'll look at what the market feels like today. Then we'll cover the supply story that got us here. We'll unpack the big rebalancing act that's happening, debunk a common myth, and finally, we'll talk about what this new reality means for you. Okay, so first things first, what does this market actually feel like right now? Whether you're out there trying to find an apartment or you're trying to rent one out. The simplest way to say it, things are tightening up. Seriously. For the first time in what feels like a long time, there's a real sense of competition out there. Those days of a wide-open renter's market, yeah, they're starting to fade into the rearview mirror. And when you zoom in, you can see all the little signs. Rents, for one, are stabilizing, and in a lot of neighborhoods, they're quietly creeping up. That feeling renters had of endless choices, it's disappearing. You're just not seeing as many grand openings for those brand new shiny buildings anymore. And it all adds up to one thing, a subtle but very real shift in leverage away from the renter and back toward the property owner. Now, to really get why this is happening now, you got to rewind the clock a bit and look at the one big story that has defined this market for years. For a good long while, if you asked anyone about the Philly apartment scene, their answer would have pretty much revolved around a single powerful theme, and that theme was construction. I mean, a massive, truly historic wave of new apartment buildings just washed over the city. It felt like no matter where you looked, from Center City all the way to the riverfronts, there was another crane in the sky, another new project breaking ground. And what was the result of all that building? A market that was tilted heavily in favor of renters. More supply meant way more choices, which meant landlords had to compete like crazy for tenants. We're talking deals, concessions, you name it. That was the old story. And this is where everything changes. This is the turning point, the moment when that old story ended and a new one began. And it was all driven by two powerful forces that hit at the exact same time. So what flipped the switch? I mean, why, after years of being what felt like a renter's paradise, did the market suddenly start to rebalance itself? It really boils down to this super simple but powerful dynamic. On one side, you had that fire hose of new construction getting turned way down. Costs went up, and honestly, the market just needed a minute to digest all the new units. But on the other side, demand, the actual number of people looking for a place to live in Philly, it didn't drop. It stayed surprisingly strong and steady. To really see this in action, let's just do a quick thought experiment. Picture a simple chart in your head. It's got two lines, one for new supply and one for renter demand. For years and years, that chart would have shown the new supply line way, way up high, floating far above the renter demand line. We were just building more apartments than the market could absorb in real time. And that gap, that's what created the renter's market. But then you'd see something happen on that chart. That supply line, which was flying so high, it suddenly takes a sharp nosedive as new projects just got a lot harder to get off the ground. The flow of new apartments slowed dramatically. And now while that's happening, the demand line just keeps chugging along, nice and steady. And then you see it, the key moment, that steady demand line finally crosses above the falling supply line. That single intersection right there, that's the turning point for the entire Philadelphia market. It's the exact moment when demand started to outpace new supply for the first time in years. Now, all of this talk about new construction brings us to a really common misunderstanding, something a lot of people get wrong about how rent prices actually work. You hear this all the time. The thinking goes, hey, if we build thousands of new luxury apartments, that should create a ripple effect that makes all apartments cheaper, right? It seems logical, but the reality is a little more complicated. The short answer, not exactly. The impact of new supply isn't like a tide that raises or lowers all the boats in the harbor at once. It's much more like a series of very specific, very localized weather systems. So here's the thing. Those brand new high-end buildings in hot neighborhoods, they're mostly competing with each other. And yeah, that intense competition definitely puts pressure on rents, but mainly within that specific high-end slice of the market. that effect doesn't always trickle down to an older building in a totally different neighborhood. In fact, while the city core was swimming in supply, some suburbs that saw almost no new construction actually had their rents rise even faster. The market isn't just one thing. It's a bunch of smaller different markets all at once. So let's bring this all home. What does this huge rebalancing act, this fundamental shift in power, actually mean for you, whether you're living in the city or investing in it? Well, it's really become a tale of two very different experiences. For renters, the era of easy negotiations and getting 2 months free is pretty much over. You have less power, and the pressure is definitely on the rise. For property owners, though, it's the opposite. There's a new sense of confidence. The constant pressure to fill empty units is easing up, and that gives them a much stronger hand to play than they've had in a long, long time. And if you zoom out even further, you can see investors are taking notice. A market that's more stable and predictable is starting to attract new interest, especially for those really well-located properties. And for the market as a whole, this is kind of like a much-needed breathing room phase. It's a chance to finally absorb that huge wave of apartments we built over the last decade and find a much healthier balance. So what's the bottom line here? Look, this market isn't collapsing, not by a long shot. It's rebalancing. After years of being defined by a flood of new supply, the whole story has changed. Now success, whether you're a renter, an owner, or an investor, it all depends on understanding this new game. A game defined by tighter supply and a totally different balance of power.